Look at this graph on the screen. This is not gold, it's not silver either. This is the price chart for copper. In the last 5 years, it has given a return of 113%. And as of January 2026, it's trading at its all-time high. Goldman Sachs has labeled this the new oil, while Citigroup projects a significant 20% upside from its present trading level. But there's a problem here. A problem that 99% of Indian investors are just completely unaware of. The simple truth is there are no copper ETFs available in India. So you are unable to take advantage of this metal boom even if you really want to. There are gold ETFs and there are silver ETFs too, but absolutely no copper ETFs, zero. SEBI hasn't approved it yet, and as a result of this non-approval, Indian retail investors are missing out on a massive opportunity. When copper delivered a 50% return in 2025, what did we do? We earned 7% in FDs. While US investors were making 50% from copper ETFs, we in India could only watch helplessly. But now, this problem is about to be finally solved. In this video, I will show you how, with just 100 rupees, you can easily invest in the best copper ETFs available in the US. And you can do this right from your mobile phone without any complicated process. And most importantly, I will show you exactly how you can leverage this metal boom to create serious wealth for yourself in the long term, maybe in lakhs or even in crores. So please make sure to watch the video till the very end, because I will show you the exact numbers of how much to invest, exactly where to invest, and how much significant wealth this small investment can create in the next 20 to 25 years. And most importantly, please do not miss this important video by mistake, because if you happen to skip, you'll also miss out on an incredible way to invest in copper. First, let us truly understand how copper might perform in the future. See, people generally consider gold and silver as a reliable store of value, which quite basically means to keep their own money safe. But copper is the backbone of the world's economy, and copper is needed everywhere these days. In your house wiring, in your phone, in your car, and now even in electric vehicles and those large data centers running AI workloads. There is a report by Goldman Sachs in which they have clearly written about copper, that copper is the new oil, and the critical role copper will play in achieving the climate goals cannot be overstated. This statement is incredibly powerful. In the exact same manner that petroleum fueled the world in 20th century, copper is certainly going to power the 21st century. If you want to make a lot of money in the future, then copper could be the right opportunity. Now I'm going to tell you 4 primary reasons why the demand for copper is definitely increasing. Actually, demand is absolutely exploding, and that explains why prices are skyrocketing. And most importantly, we will see how copper prices might perform in the coming times. See, the first reason is clear, that is electric vehicles. This is the most important driver. A normal petrol or diesel car uses only 23 to 25 kilos of copper. But do you know how much an electric vehicle uses? From 60 to 80 kilos. Essentially, that is 3 times more. Furthermore, an electric bus utilizes 225 to 370 kilograms of copper, as Wood Mackenzie's research suggests. By 2040, just the passenger electric vehicles itself could consume 3.7 million tons of copper, and this will take the demand to the next level. The second main reason is renewable energy. Solar panels and wind turbines require massive amounts of copper. A 1 megawatt solar installation requires 2.2 to 5.5 tons of copper. An onshore wind turbine demands 3 to 4 tons of copper material, whereas an offshore wind turbine requires 9.6 tons for every single megawatt. This quantity is so much that it is actually equal to the weight of an average school bus. IRENA forecasts 45,000 megawatts of offshore wind installations yearly by 2025, year after year. From just one sector, the demand for copper will actually be almost 4.3 lakh tons annually, and this is just offshore wind power. Solar and onshore wind are separate. The third reason is artificial intelligence and massive data centers. This is the most interesting and most underestimated reason. You all are using AI like ChatGPT, Claude, Gemini, but do you actually know how absolutely massive the data centers required to run these AI systems really are? And how much copper is really used in these data centers? According to the Copper Development Association, a standard type of data center requires roughly 5,000 to 15,000 tons of copper. But the hyperscale data centers that are being built today for massive AI workloads, like for example the NVIDIA's HGX systems, are using 50,000 tons of copper in one facility alone. Can you imagine? BHP estimates that the copper demand from AI data centers will actually increase from 5 lakh tons in 2024 to 30 lakh tons by 2050. That's a 6-fold increase. Moreover, JP Morgan expects that in 2026 alone, data centers will consume 4.75 lakh tons of copper, which is 1.1 lakh tons more than in 2025. The fourth reason is power grid infrastructure. This is the biggest demand driver that people tend to ignore. S&P Global's projection is that copper demand for transmission and distribution will reach approximately 71 lakh tons annually by 2040. This is just double from 2020. $7.5 trillion is planned for this infrastructure investment. Just think for yourself where the price could reach with such a huge demand. In many sectors, demand is said to increase 4 times and in some 6 times. Prices could also rise very rapidly. The demand is increasing, but the real game changer is the supply side. This is a story that the mainstream media simply does not cover properly at all. The world's largest copper producer is Chile with a 24% global share. Following that, it's the Democratic Republic of Congo with 13% and Peru with 12%. But all three of these countries are facing serious problems. Chile's largest copper company is Codelco. In the year 2023, its copper production hit a 25-year low, amounting to just 13.25 lakh tons. Rock burst incidents, wall slips, and the Atacama drought have all severely impacted production. Chile's entire copper production stands at a 25-year low, at just 53.3 lakh tons of production. Peru is facing deep political instability. Since 2018, the president has changed 6 times. The Las Bambas mine, which provides 2% of global production, was shut down in February 2023 due to protests. It's estimated that 30% of Peru's copper production is at risk. And the biggest problem is what? The amount of years it generally takes to develop new mines. It takes an average of 17 to 24 years. In the US, it takes 31.8 years due to permissions and development hurdles. The Resolution copper mine in Arizona was discovered in 1995, but the actual production will start around 2030. That's a 35-year wait. In September 2025, a major disaster occurred at Indonesia's Grasberg mine. It was flooded with 8 lakh tons of material. The mine provided 4% of world output. Full recovery is expected by 2027. Production in 2026 will fall by 35%. An S&P Global report from January 2026 shows by 2040, there will be a supply shortfall of 1 crore metric tons. This is 24% of the projected demand. This means the demand will be 42 million tons, but the supply will be only 33 million tons, and that is the absolute maximum. Filling this projected gap is almost impossible. That is, given the time required for setting up new mines. Because setting up a new mine can take an average of 17 years to 24 years. These new mines cannot be created overnight. That is the reason why prices are skyrocketing these days. And wealthy people are also investing in copper. But in India, the current situation is that there are no pure play copper ETFs available. Not on the NSE, not on the BSE. Actually, SEBI has approved gold ETFs and they have also approved silver ETFs, but they certainly haven't approved any copper ETFs yet. At least they have not approved it yet. So what does this mean? This means that if you want to actually invest in copper through the Indian exchanges, you will find your options limited. Now, in the ICICI Prudential Nifty Metal ETF, Hindustan Copper has a weightage of only 1.5% to 2.5%. If you think about it, this is not pure copper exposure at all. But in the US markets, there are multiple copper ETFs available, giving exceptional returns and making people very wealthy. Investing in these particular copper ETFs has now become easier than ever. There are basically 3 major copper ETFs in United States. CPER, the United States Copper Index Fund, which directly tracks copper futures. In 2025, it gave a return of almost 38.89%. The second one is COPX, the Global X Copper Miners ETF, which invests in copper mining companies. In the year 2025, it gave a return of 93.44%, and COPP, Sprott Copper Miners ETF, which was launched in March 2024 and also holds physical copper. If you look at COPX's 10-year return, it is about 735%. This means if you had invested just 1 lakh rupees here in 2025, it would have become 8,25,000 today. Now, the most important question is, how can Indian investors invest in US ETFs? Previously, this process was very complicated. Find a foreign broker, do all the paperwork, make a wire transfer and understand the taxation. But do you know, now this entire process can be very easily done with just a single mobile app. Whether it's US stocks, US ETFs or US metal ETFs, IND Money is the most convenient platform for investing in them. The biggest advantage of this platform is that you can invest in US stocks and ETFs with just 100 rupees. Fractional investing is available. This essentially means you do not need to buy a whole share or ETF. Let me show you exactly how this whole process works. You can simply open the app and navigate right over to the US stock section. Here you will find all the major US stocks and ETFs available. Simply type COPX in the search bar and the Global X Copper Miners ETF will appear, or search for CPER and you'll find the United States Copper Index Fund. Now if you feel you are only looking to invest in copper, then CPR is the better option because it directly tracks copper prices. But if you want slightly higher potential returns with higher associated risk, you can consider COPX, which invests in mining companies. In 2025, COPX delivered nearly 2.5 times greater returns than CPER. What this means is that the value and profit of copper mining companies increased far more than the actual price of copper. But besides copper, you have the option to access multiple metal ETFs on the IND Money app. There are gold ETFs, there are silver ETFs too. Many ETFs are available. Platinum ETFs or uranium ETFs are also available. All these metals have recently been touching new highs. And if you want a diversified metal portfolio, explore these options. The account opening process is very simple. Get the app, input your mobile number and finalize KYC with Aadhaar and your PAN. There are no account opening charges either. The process is very smooth and finishes in just minutes. The interface is very clean indeed. Detailed analytics are available for every stock and ETF. Price charts, performance history, key metrics, everything is available. A feature which I find quite useful personally is called the Investor Sentiment Indicator. It basically tells you whether other investors are bullish or bearish about that particular stock. Now let me show you step by step exactly how to buy a copper ETF. First open the IND Money app, then select US stocks. In the search bar type COPX or CPER depending on whichever ETF that you want to buy. Select the ETF and then click on the buy button. Now here is an important feature which is fractional investing. The current price of COPX is indeed around $60 to $65, which is about 5,500 rupees. But the best part is that you don't need to buy a whole share. You can start investing with as little as 100 rupees. Just enter the required amount and the system will automatically calculate what fraction you will actually get. For payment, you can also invest directly in rupees through IND Money and the app automatically handles all the necessary currency conversion. There are absolutely no hidden charges. You pay exactly the price that is shown. Simple. Another powerful feature is SIP in US stocks. If you want, you can set up an SIP in a copper ETF starting from just rupees 500 per month. This feature is very simple and also useful because you really don't have to worry about market timing. Investments are made at regular intervals and you also get the benefit of rupee cost averaging. Let's say you do an SIP of 2000 rupees every month in COPX. After 25 years, assuming a 15% CAGR, which is conservative based on the historical returns of copper ETFs, your total corpus size will be approximately 65 lakh rupees just from 2000 rupees a month. And if the returns are 18 to 20%, which have been historically delivered on IND Money, your corpus could exceed 1 crore rupees. IND Money also has some advanced features that are very valuable indeed for serious investors. First is the automated tax report. When investing in US stocks, the taxation part can be a bit complex. Short-term gains, long-term gains, dividend taxation, all have different rules. IND Money automatically generates a tax report for you, which can be used directly for ITR filing, and this very feature alone saves a significant amount of time and effort. The second feature is the US dividend calendar. If you choose to invest in dividend-paying stocks or even ETFs, this helpful calendar tells you exactly when the dividends are due. It's very useful for planning. Third, the portfolio tracking is also comprehensive. All of your existing investments encompassing Indian stocks, mutual funds or US stocks and ETFs are displayed in one single place. Tracking your overall net worth also becomes very easy. It helps view asset allocation, plus you can analyze performance. But prior to investing in US stocks, understanding taxation is very important. Let me explain it in simple words. When you send money from India to the US through the liberalized remittance scheme, a 20% TCS is levied on remittances over 7 lakh, but this TCS is refundable. It gets adjusted when you file your ITR, so don't worry about this. For capital gains, the rules are if you sell after holding for less than 24 months, it will be a short-term capital gain. You will be taxed according to your income tax slab. Should you maintain ownership for exceeding 24 months, that qualifies as a long-term capital gain, which is then taxed at only 12.5%. Without any indexation benefit, a 25% withholding tax is applied on dividends in the US. This is basically reduced from 30% due to the India-US tax treaty. To do this, you simply need to fill out the W8BEN form easily available on IND Money. Dividends are also taxable in India at your slab rate, but for that you can claim foreign tax credit through Form 67 to avoid double taxation. Another important point, in the US there is no tax on capital gains for non-residents on listed securities. You only pay tax in India. This is actually beneficial compared to investing in other countries. Now let me show you the calculation that is the crux of this entire video. After seeing these numbers, you will properly understand exactly how much wealth can be created with small regular investments in a copper ETF. Scenario 1. You invest just 2000 rupees every month in COPX for the next 25 years, assuming a 15% CAGR, which is a conservative estimate given the historical performance. Your total investment will be 6 lakh rupees. And what will be the final corpus? Approximately 65 lakh rupees, more than 10 times your investment. In scenario 2, if you invest 3000 rupees monthly with just a 10% annual step up, meaning you invest 10% more each year as your income begins to grow. With the same 15% CAGR assumption, after 25 years, your corpus grows to almost 1.4 crore rupees. And in scenario 3, if the copper ETF maintains its historical performance with a CAGR of 18 to 20%, then over 1 crore is possible in 25 years with just 2000 rupees monthly. This is the magic of compound interest combined with a high growth asset class. But always remember one key thing. Past price performance is not a guarantee of future performance. But analysis should always be based upon future demand. But I won't just show you the positive side. I'll also explain the risks. This is important. It's part of responsible investing. The first risk is currency fluctuation. You are investing in rupees, but the ETF is traded in dollars. If the rupee strengthens against the dollar, then your returns could quite possibly decrease. Historically, the rupee has indeed been depreciating, which is actually beneficial for US investors. The second risk is commodity price volatility. See, copper prices can fluctuate a lot in the short term. Copper also fell 20% in 2022, but recovered within a few months. That is precisely why it is suitable for long-term investment, not for short-term trading. The third risk is geopolitical factors. US-China trade tensions, tariffs, possible sanctions, all these factors can impact copper prices. Currently, a Section 232 investigation on copper is underway in the US, which could then lead to a 25 to 50% tariff. This situation can certainly create short-term uncertainty. The fourth risk is China's demand. China actually consumes 57% of the entire global copper supply. If the Chinese economy slows down, the demand for copper could certainly be affected. But despite these noted risks, the structural demand drivers, EVs, renewables and AI are so strong that the long-term outlook remains positive. The most important thing is to maintain a diversified portfolio. Don't put everything into just copper. You can put some money in equity, some in gold, some in silver, some in US stocks, and then some in copper as well. If I put this in summary, remember these 5 points. First, copper is the new oil and every major global bank is bullish on it. Second, supply and demand disparity should hit 1 crore tons by 2040. Third, there are no copper ETFs in India, but US ETFs are accessible, so you can invest your money there. Fourth, COPX returned 93% in 2025 with a 10-year return of 735%. Fifth, with IND money, invest in US copper ETFs for just 100 rupees. SIP is also available, which can help create long-term wealth. Always remember one key thing. The future is built on things that will ultimately shape it. Investors who understand this amazing opportunity and are taking action will create serious wealth in 10 to 20 years. You can participate in this global opportunity with just 100 rupees from your phone. Don't miss this opportunity. I have put the link to IND Money in the description. Opening the account is free. The steps are easy, so check it out once the video is over. If you miss out on this opportunity today, you may regret it in the future. And yes, if you found this video informative, share it with all your friends who are smart and are interested in investing in US stocks, US ETFs, or most importantly, in copper. We will meet again with another interesting video. Jai Hind.